Welcome to the Western Producer One Beer Markets Update. I'm Phil Franz-Warkentin. I'm here, joined here today with Bruce Burnett, Director of Weather and Markets with Glacier Farm Media. Welcome here, Bruce.
It's good to be here, Phil.
Well, good to have you. And we're today we're talking about tariffs, trade, and all the various geopolitical stuff going on around us, and how that's affecting ag markets. And I know we've seen lots of ups and downs as tariffs come and go. What are you seeing right now? What are we watching on that front?
Well, certainly there's a number of factors in the oilseed market during this past week. We saw a conversation between President Trump and President Xi, and President Trump indicates that perhaps China is going to import 20 million tons this crop year of soybeans versus the originally agreed upon, or at least we think the originally agreed upon 12 million tons. China has purchased that much soybeans right now, in terms of it's just working into their sales reporting system, but essentially China has fulfilled that agreement. So the market is quite optimistic, and we moved soybeans up 25 cents in one day and an additional 15 to 20 cents in the following trading session. So that's provided a little bit of surge to the oilseed markets. On the other hand, the wheat market has been in the doldrums, to say the least. And so that's another thing that we've been monitoring. I recently did a presentation out in Beausejour, Manitoba, and I talked about these factors, and especially looking at wheat. I think it's important to realize where wheat occupies, what position wheat occupies in terms of how these tariff structures impact trade, et cetera, et cetera. And I think the idea here is that of the crops that we grow on the prairies, wheat, spring wheat, is the least affected by these tariff results. It's not a crop that's targeted, and we have a well-diversified market. Well over 40 countries have received our wheat this year so far, and that's in reporting to the end of November. And typically we would be up closer to 80 countries. So we have a very well-diversified market. Yes, China is the largest importer, or at least was to the beginning of November, but also other countries, Japan, Bangladesh, Indonesia, are also big participants in this. The thing with wheat, though, is that prices are low, and the reason that prices are low is that we've produced a very large crop across the globe this year. It's record production by about 40 million tons from last year, which was the previous record. And of that 40 million tons, 30 some odd of them are in the major exporters. So when major exporters have all of that wheat, then they're going to sell it and prices are going to go down. And that's what we're seeing right now. The Argentinian crop, which is a record, and a very large Australian crop are moving into the market, and that's keeping prices low. So if we look at the futures, the markets on wheat, the markets will rally maybe a nickel or a dime over a period of time, and then quickly that gets beaten down by market participants. Funds are short, so that just means that wheat's going to trade in the flat line here. We're waiting for new information about the 2006 crop, but
26?
to 2026 crop. But really, there's nothing right now that's gaining any attention. So, and in fact, we're getting some reports from places like the Black Sea in Europe that things are looking okay as we head out of winter into spring in some of these growing areas. So that's something to keep a close eye on. But if things keep on going without a major threat, I don't see wheat prices rallying at all. Yeah.
So large crops, but good demand balancing out and sort of steady as she goes on wheat.
Yep.
So what's the watch for opportunities as they present themselves in that steady market or
Yeah, certainly.
yeah.
And when you're making sales, check your local basis. at the elevators, and I would say whenever you get a little rally in your prices, go ahead and sell it, and then this nibbling away, I guess, at any market rallies is sort of the strategy. Um, you will know if there are some major events happening in the wheat market in terms of threats because it's closely monitored. So until then, I would say just eat away at that at pricing your crop just because of the fact that we don't expect a major rally here.
Yeah. And wheat largely immune from the tariff uncertainty going on out there. Not the case for canola or soybeans. Where things stand on those markets that are reacting to the news as it comes out.
Yeah. So canola reacted positively to the news from the federal government that we had come to a deal with China. We're going to see a reduction in import tariffs on canola seed to 15% as of the beginning of March. One thing to note that, again, it takes about 20 days or so for a boat to ship from Vancouver into Chinese ports. So that export program will be starting loading out in February. There are reports of a number of cargoes that have already been sold of canola to China. They're still subject to a 15% tariff. So, again, if you look at the current prices on the futures, about 660. So let's say the landed price, and this is not true numbers, it's just guesstimates of $700 a ton. 15% of $700 a ton is still a substantial amount of money in terms of tariffs. But anyway, we're seeing import demand from China. That's improving the canola situation. And in fact, canola prices now that we've had a bump from the soybean market are actually looking considerably higher than they were last year at this time, about anywhere between 15 and about $30 a ton. So I think again these opportunities should be grabbed when you can, especially if you're behind on your canola marketing program.
I know a similar situation on soybeans with the U.S. and their back and forth deals with China. Soybeans have shot up this week as well on the latest news. The More legs there, or is it depending on if the rumors become reality?
If the rumors become reality, I think certainly the rally may be sustained here, but I think it's important to take a look at the risk that you would have in soybeans right now. Uh, Certainly, an additional 8 million tons to China would be positive news for the US futures market. But at the same time, you have a record large soybean crop in Brazil being harvested. And they're going to be hitting mid stride of their harvest here in about 2 weeks. So it's something to remember that that crop's going to be marketed as well and should provide some pressure in the US soybean markets. Um, if this trade deal with China goes through, that's one thing. But then all of the other soybean markets around the world will probably be gravitating towards Brazilian soybeans because they are considerably cheaper than the US product right at this present moment.
I know we were talking earlier today on, I guess, canola sales, and it's looking like this might be if you're not sold, it might be a good time to clean up a fair bit of old crop uh, sales at these prices.
Yeah, I think this rally in soybeans and canola is a good opportunity. Clean up your sales on old crop and get down to gambling stocks, whatever you want to carry in if you think there's going to be a last minute rally. But get the majority of the old crop sold. And I would even encourage people to take a look at layering on some new crop sales, and that's both in corn and soybeans. Um, it, I think especially important for soybeans because if we don't have any weather problems in the North American crop, we're going to have not only this big Brazilian crop, but also a fairly large North American U.S. crop, essentially in soybeans. So that's probably not positive for markets and coming up. So again, selling the rallies, getting some pricing protection out for 2026 is probably, I would say, the best strategy right at this moment.
Are you hearing anything on spring is not too far away now on acreage ideas or where these spring crops might be with this boost in prices, will we see a boost in acres, or is it too late and stick with rotations?
Well, again, I think there was the possibility, certainly when we were in the middle of the tariff issues with China, that we would be reducing canola area maybe a little bit. With this increase in prices and the um, uh, better outlook for exports next year, I think that's positive. We probably are going to at least stay much the same in terms of area on oilseeds canola next year in Western Canada. Wheat areas probably going to drop, the total wheat areas, because durum prices haven't been that big, but haven't been that good. So we'll see a reduction in durum area in possibly a very stable spring wheat area. I think that's where we're headed this spring. But again, we're going to get some solid data on that this month as well.
Okay. All right. Well, lots of moving pieces to keep an eye on. Appreciate you coming on to shed some light on all of that, Bruce. Any final thoughts you think to add right now as we're looking at these volatile markets?
Well, I think again the volatility is being created by more political type concerns, especially U.S. trade concerns. One thing to keep your eye on are the USMCA negotiations that are going to happen here in a few months. That's very, very important, especially in regards to some of the exports of our ag products. Currently, agricultural products move on both sides of the border back and forth with very few tariffs or restrictions. But certainly anything that would cause issues with exports, especially canola oil exports, would be a big concern for us. So just keep on monitoring that situation as we go through the marketing over the next few months as that agreement gets negotiated.
All right. Appreciate it, Bruce. Thanks a lot. And everyone listening in, following along, you can always go to the Western Producer Markets desk for all your up-to-the-minute updates on the grain and oilseed futures markets and the cash markets and all of that on our daily reports on YouTube and at the Western Producer website. And so, yeah, thanks again, Bruce, for joining us today.
Thanks. It was great.